Hello and welcome everybody, I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to my video today, and don't forget to like this video and subscribe to my channel. That will be amazing. Thank you very much. So today's video, we will be talking about what happened in the market last week, and we'll also be talking a little bit more about our performance overall for the week. And our performance last week was actually quite good if we compare that to the general market, because the S&P 500 was down about 1.2% and the Nasdaq 100 was down about 1%, and most of the major indices in Europe also did quite poorly. So our portfolio was up about 1.2%, which I was very pleased with on the surface of what had happened. And that was helped a lot by some of the Chinese stocks that we had in our portfolio. I also did quite a lot of short-term trades last week in a number of different things, such as individual stocks, as well as doing some trades in natural gas as well, which helped to provide some stability to our portfolio and helped us in times where there were drawdowns. And as I mentioned at the top of this video, the US markets suffered last week, and that is because there was some things that were released and there was some negative sentiment in the market overall. And one of the things that was released was there was an announcement by JP Morgan, who said that a hurricane was coming for the economy, in which they said that with rising interest rates and high inflation, that they expected that the markets were going to suffer over the next couple of months. However, I think it's very important to take everything with a pinch of salt. Companies such as JP Morgan, they actually benefit from higher interest rates, and it's important to do what they do and do what they invest in, not listen to what they say, because we have seen this a lot in the past by Jamie Dimon at JP Morgan, who often changes his direction after saying one thing and then doing a completely another thing. So I would take his comments with a pinch of salt. Also, there were other comments from Elon Musk last week, who sent an email to senior officials and senior executives at Tesla, in which he initially discussed potentially reducing the workforce of Tesla by 10% in order to be able to mitigate any damage that they may have from a recessionary economy if it was to happen. However, speculation continued last week in terms of the Federal Reserve, and there are some early signs that the Federal Reserve are recognizing the fact that increasing interest rates is having a significant effect on the global economy. And it is expected that they will increase rates potentially at the next Federal Reserve meeting by 50 basis points. However, they are recognizing that this is putting a burden overall on the economy, and that they will continue to monitor what is happening. And this was outlined last week by Lael Brainard, who is the deputy chair of the Federal Reserve, who said that there were signs that increasing interest rates were having a negative effect on the economy, which raises some hopes that later down the line that they will either slow these down or they will halt these in order to be able to protect the economy from a much larger recession. One last thing to watch out for in the US this week, and I'm recording this video on a Monday, is that the Amazon stock split takes place today. And what that will essentially do is it will be a 20-to-1 ratio, and that is going to reduce the individual unit price of Amazon stocks. So it may come up a little bit funny in eToro if they haven't fixed the stat straight away. So don't be alarmed if you see some sharp drops in the price of Amazon, because of the stock split. It actually doesn't really make any difference to the value of your Amazon stocks. However, they do like to split these stocks. And the last time they did this was actually in 1999, so it's been a long time since they split the Amazon stocks, but it does make it more affordable, and there is a psychological element to being able to buy a full share of Amazon. So last week Amazon did particularly well on this split news. However, the effects of these stock splits tend to be very short term, and I'm just more positive on the overall outlook of Amazon and the future growth trends. So let's move on to Europe now. And last week, the European indices were also slightly down overall for the week. And the UK, at the end of the week, the stock market was closed. So it was a much shortened week for the UK. And there were a couple of major news from Europe. And one of them is that they have agreed a oil embargo on Russia, and that most of the European countries are going to take part in that oil embargo, so no oil will be able to be transported from to Europe. However, there are some exceptions to that case in the terms of the Czech Republic and also Hungary, who are very dependent on Russian oil reserves, and by cutting those off, it would give them a lot of short-term energy shortage problems. So they will follow later as they try to reduce their energy dependency on Russia. However, Russia has continued to retaliate to some of these sanctions that have been placed on them. And one of those, as we know over the last couple of months, is that Russia has been asking all European countries to pay for the natural gas in Russian rubles. And many countries such as Finland and a few other countries around Europe have actually said that they're not going to pay in Russian rubles. And another country that fitted into this camp was the Netherlands, who have also said that they're not going to pay in Russian rubles. And it was announced last week by Gazprom, which is a Russian national entity, and what they have said is that they will stop providing gas and they will cut off the gas to the Netherlands. We also saw the European Central Bank chief economist Philip Lane, who said last week that Europe was quite likely going to continue with interest rate hikes in July, and that is most likely that will be at about 25 basis points. And the main area on why they want to increase those interest rates is mainly to do with the inflation figures that have been released very recently. And that shows that in the Eurozone, inflation has increased to about 8.1%. And it's very important that they continue to increase those interest rates in order to try and bring down and quell some of that inflation. And inflation is even higher in Europe at the moment if we compare that with the US, and that is because of those increased rates in oil and natural gas and that dependency, as I mentioned, that Europe has on Russia. So let's talk about China now. And China last week was actually a bright spot for once. And one of the main reasons why the Chinese stock market rallied last week is that they have implemented over 32 different measures in order to try and provide stimulus and to try and prop up the economy. As we know that China has been in a state of lockdown in many different cities around China since the end of March, and we all know that this has and had an effect on both their manufacturing activity and the economy overall in China. However, they have put in place these measures to try and provide as best of a soft landing as possible. And they are trying to do things such as provide loans for housing. We know that the housing and the property development sector in China has been difficult over the last 6 months or so. And the China central bank actually arranged meetings with top executives from Chinese banks, and they wanted to know why the amount of loans that have been provided to property developers and to home buyers has continued to be soft, because they have actually mandated that they want to make it easier for home buyers to be able to buy properties in order to keep that economy running. Chinese factory activity also reduced less than expected in May, and that was down from about 48% in April down to about 46%. And we did obviously expect that there was going to be a reduction in the amount of factory activity because of those lockdowns that are around in the country. However, this is a sign for some economists that say that the worst could be over for the lockdown in China, and that they could start to open things up again, which would be very good for the overall world supply chain. I'm still very positive on the Chinese market moving forward. I know it's been a very tough year for Chinese stocks, but it has been all over the world. But I'm expecting, because of these measures that they're putting in place and that stimulus that they're providing for the economy, and I think once COVID-19 is started to ease up in China and that they take away some of these restrictions that they had, I do expect it to have a much better second half of 2022 than it had in the first half of 2022. So we need to be patient with those stocks that are in our portfolio for China. As we move on to the top 3 performing stocks of last week, and this week's top 3 performing stocks of last week are dominated by China because of the rally that happened in the Chinese markets last week. So the top performing stock for last week was Haidilao, and that was up by about 10.1%. And this has really benefited from some of those tough COVID-19 restrictions being slightly lifted in some cities. The second best performing stock of last week was Wynn Macau, and that was up about 10.1%. And Wynn Macau is a casino group which is based in Macau, and obviously they are beneficiaries of an easing of restrictions overall for COVID-19. The third best performing stock of last week was JD.com, and that was up about 5.2% last week. As we move on to crypto now, and crypto again was quite a flat week, especially for Bitcoin, and Bitcoin has continued to kind of hover between that kind of 28,000 to 31,000 range since we had the whole debacle with UST and also with Luna, which we had that big crash below 30,000. However, we have continued to now over the last couple of weeks started to see a range. I'm quite confident that Bitcoin can hold that support level, and we could see some upside from here moving forward. And it does often take that kind of capitulation moment in the market before you start to see these rises in the market. But often you can have this either an accumulation phase, or you can have a ranging in the price before you start to see further increases. And we have seen some positive institutional things that are happening in the market as well. And we've seen the 𝗱𝗶𝗀𝗀𝗀 Canadian ETF, which has continued to get more and more inflows of Bitcoin. And they actually increased their inflows of Bitcoin last week by over 11,000 Bitcoin. So that shows that there is still a strong hunger from institutional investors, and they are often, the institutional investors are smart money, so they are often try to find areas where they think that Bitcoin may have bottomed before they start to accumulate more and more. So I think that this is a very positive sign overall for Bitcoin. We also saw some institutional signs in which some of the institutions are trying to double their profits. And what they do is they often cycle into some of these crypto related stocks. So one of them might be MicroStrategies, and they try to benefit from an increase in the price of MicroStrategies, and then a couple of days later they may rotate into buying Bitcoin as a hard asset to try and profit again from some of these differences in the price between crypto related stocks and crypto related assets. So we did see that last week, and that is a sign that they could potentially buy more Bitcoin over the next couple of weeks. We saw companies such as Coinbase who did a hiring freeze, which can show that they expect these conditions to last longer. There was also a bug last week in the Solana blockchain, which actually caused the chain to actually grind to a halt for a period of time last week. As we know, Solana is a very fast blockchain in which they try to do transactions as quick as possible, and they have a very high transaction per second rate. However, it is susceptible to some downtime overall in the blockchain. So we have to be really careful of this moving forward, and it's kind of one of the trade-offs that you have with Solana. There's also a lot of optimism around Cardano over the next couple of months as it actually puts in place its new hard fork, which is called 𝘂𝗂𝗋. And 𝘂𝗂𝗋 will actually allow larger block sizes, so it means transactions will speed up. They will also be able to do smart contracts and other functionality as well for Cardano. And this is seen to be quite good overall for the price of Cardano over the next couple of months. And there is quite a lot of buzz around this. So it's something to keep an eye on. And I'm glad that we have some Cardano in our portfolio to hopefully benefit for this. Binance have also launched a $50 million fund in which they're going to provide funds to some projects within the Web 3.0 space, and this is generally pretty good for the overall ecosystem of crypto as companies try to develop more products for the next stage of crypto development. Thanks very much for listening to my video today, and I really appreciate all the patience that you've had with our portfolio over the last couple of months. It has been a very difficult 2022 overall in the markets, but we must continue to stay persistent, and we must have some patience with the portfolio overall. And I'm quite confident that the second half of 2022 will be better than the first half of 2022, and that we have some very strong assets within our portfolio that should perform really well in the future. Also, don't forget to join my Discord group. We have a really awesome community of people that are regularly having discussions around the general markets, and you can also ask me any questions. So please also join that group. And until then, have a great week ahead.